I'm Ellis Martin. Join me for a chat with Dr. Eric Jensen, the General Manager of Exploration for EMX Royalty Corporation, trading as EMX on the New York Stock Exchange and on the TSX Venture Exchange. EMX is a precious and base metals royalty company. The company's investors are provided with discovery, development, and commodity price optionality while limiting exposure to risk inherent to operating companies. EMX has a sizable global portfolio of assets, a strong treasury, and no debt. Dr. Jensen graduated from Carleton College in Northfield, Minnesota in 1993 with a BA in Geology and received his Ph.D. in Economic Geology from the Center for Mineral Resources at the University of Arizona in 2003. Dr. Jensen, welcome to the program today. How are you, Eric?
Doing really well, Pat. Thanks for the invitation, Ellis. I always like talking with you.
You've got quite a few properties all around the world. Knowing you, you're busy all the time and you're constantly plugging into your operation. You're not micromanaging. You like to stay informed. Give us an overview of the company with regard to the properties, the assets.
Yeah, we've got obviously a rapidly expanding portfolio of project interests around the world. Those range from projects in which we're operating exploration in conjunction with a partnership or projects that are being advanced almost exclusively by partners, which is the ultimate goal. That's the focus of our business model. So EMX is a very highly collaborative company. Amongst these 200 project interests, the majority of those are being advanced in a partnership of some sort. And those partners range from the world's biggest mining companies. We've done repeat business with some of the biggest mining and exploration companies in the world, as well as a gamut of mid-tier to junior explorers as well. So yeah, quite a dynamic range of projects geographically, in terms of the partnerships, in terms of the business relationships we have with these companies. Commonality to all these things is that EMX retains ultimately a royalty on the projects, which is the goal. And we're organically creating a massive royalty portfolio. These span quite a number of metal types as well. We have a lot of copper and gold exposure, but we have a growing number of battery metal focused projects. We're doing a lot of that work in Europe right now. Nickel, copper, platinum group elements, and cobalt, those types of projects, but also some good base metal exposure. Quite a number of lead, zinc, silver deposits that we've added to our portfolio through the years. So a pretty diverse range of project types, geographic locations, and partnerships. Pretty exciting.
Let's talk about battery metal specifically for a couple of minutes, if you don't mind. With the new administration coming into office, there's going to be the mandate that's been in place in Europe for a long time, especially Northern Europe, where you have some of your assets. There's a mandate for clean energy, clean technology, everything electric, and I'm very excited about that. What have you done to advance that portfolio and advance projects in that area?
Yeah, Ellis, that's a great question. We've done a lot of work. We're one of the leading explorers in Northern Europe. We have quite a presence in Fennoscandia. And by Fennoscandia, I'm referring to Finland, Sweden, and Norway, especially Sweden and Norway, but we have some battery metal projects now in Finland as well. Several years ago, probably I was a bit of an early mover on this, but about 3 or 4 years ago, we started looking at this market and saying, this thing's going to take off. All the trends that you were talking about, the mandates that we see in Europe. Norway was one of the first countries to mandate the transition to electric vehicles with the goal of achieving new car sales being dominated by electric vehicles by 2025. So they were ahead of the curve, but we could see the writing on the wall, if you will. And the EU was certainly in step with that type of transition. So we also knew that the geology in that part of the world was fantastic. Everyone's familiar with Voisey's Bay and the phenomenal nickel discovery that was made in eastern Canada a number of years ago now. But that geologic terrain, when you reconnect the continents through plate tectonics, that terrain carries right into the northern part of Europe, into Fennoscandia. And so we see the same types of systems over there in terms of the magma types, in terms of the styles of mineralization. This wasn't lost on the explorers in that part of the world. Falconbridge has worked there for many years. And we scooped up quite a number of these old Falconbridge properties in particular. After their merger with Xstrata, they curtailed their exploration and they let a lot of the projects go. And those sat there for several years until we looked at it and said, wow, all this previous work had been done throughout Fennoscandia on these nickel projects, not only by them, but other companies as well. And 3 years ago, no one cared. Those projects were all open. We just walked in and staked a whole series of these projects and have now parlayed those into a variety of partnerships. And we're very bullish on the near-term and long-term value of the battery metal assets. So we were able to stake things that have historic resources, which is something that we love to do whenever you have an opportunity to do that. But we took a contrarian approach. We were doing this at a time before the market really surged, and well before people were really looking at these things. And so we were able to put together at very low cost, a very cost-effective fashion, a robust portfolio that had multiple historic resources of significance and that we've been putting into partnership, and we're working on some other new initiatives now with some potential partners. So it's a pretty exciting time for us.
Well, the market was very distressed with regard to nickel about 3-4 years ago, except for probably in Northern Europe. They knew what they have there. You knew what they had. How did you know? And how did you know that this was going to be a thing 3 or 4 years or 5 years out in the future?
Yeah, again, it just came from reading the tea leaves, I guess, in some ways. We saw that, especially with countries like Norway, again, mandating this transition. We were watching the battery technology space. A couple of years ago, you may recall, Cobalt had this wild run-up. But in looking at that, we saw nickel as a displacement component to these battery metals, and talking to the experts, that's what they were telling us. And people like Richard Shoddy were pointing to this. They were saying, look, there's a long-term clear deficiency that's going to be arising in terms of the supply of some of these key components. And nickel was one that he pointed to years ago, as did others. And so when you looked at the supply and demand projections, that one made sense. And also the nice thing about nickel is that it also has another use. Like we saw the big run-up and then fall of cobalt. Its main use is that and in pigmentations, whereas nickel's used in stainless steel. So there's a fundamental drive for nickel consumption globally that's in addition to the battery metal market, which is just adding to the top of that market. So we felt it was a really good long-term stable bet on a solid metal. And the fact is that the types of nickel deposits we're exploring for also come with things like copper, PGEs, palladium, things like that. So it's a really nice metal grouping. And you've got exposure to multiple commodity types, if you will, in the battery metal space. Was one peaks like cobalt or nickel surges or palladium surges. And there's also typically gold with these systems. Yeah, it's just a really nice combination. It seems like you're always going to hit one of the metal peaks in these multi-metal type deposits that we're looking at.
I was at a battery metals conference about 3-4 years ago here in Southern California, and one of the automaker or battery executives, I can't remember which company, was really pitching nickel as a mitigator of cobalt. Not because he had an interest in a nickel company. He didn't. He was just talking about battery technology and how it was changing for two reasons: the political risk with cobalt, clearly I'm talking about the DNC, and also that nickel's just better in the battery than cobalt has been. We're not going away from cobalt. We're going to continue to have it for quite some time, but it's going to be mitigated and diminished in need because of nickel.
And that's exactly what we were seeing, Ellis, years ago. And like you said, at a time when the nickel market was very soft and just no one cared. We started staking these nickel properties, and I remember people, companies saying, what are you guys doing? What do you want those things for? But yeah, a couple of years later, it turned out to be, and we love those contrarian plays. I'm always looking for contrarian opportunities. The time to stake gold properties is not at the top of the gold market. It's well before that happens, which is how we operate. So a lot of the properties we're vending now on the gold side were things that we acquired years ago when gold was trading, $1,300 and was trading out of favor. So yeah, we'd like to do that. So I'm actually actively looking for the next nickel, the next gold right now, and I have some ideas. I'm not going to tell you what those are right now. In the next year or two, you'll start to see these things germinate in our portfolio for sure. We'll contrarian things we're doing right now.
I'm thinking, and I probably shouldn't think out loud like this, stop me if you want to, but I'm thinking there's some as yet to be revealed deposits in Canada.
Yeah, we're actually quite active in Canada. The last year or two, that's changed dramatically for EMX, and that's a logical progression for us. We haven't had a presence there, but we are becoming quite active there now. We've made a series of acquisitions this year, and we're looking to create a organic generative program there to complement those acquisitions we made. So we're making some nice strides there. I think that's probably what you're referring to.
I'm just speculating. You guys are pretty tight-lipped about what you're doing until you've released it to the public, which I appreciate. There's not a lot of fluff or promotion really in a business that has to have some sort of promotion or exposure. You guys pretty much stick to the facts that you release when you do a news release.
We've never been a promotional scheme. Our group is not focused on the share price in a month from now. We're looking at the horizon as we have for the last decade. We've been doing this for 17 years. We've been doing this. And so this is I call it the crescendo of value creation. This is internally, we jokingly refer to this as the get rich slow scheme, but we've been doing it for a long time. And this is a crescendo. If you look at the value of intrinsic value in our exploration portfolio through time, that's clear. This has been a slow, disciplined process. Well, I shouldn't say slow because it's not slow anymore. It took a while to gain the momentum that we've gained now, but now the pace of business is extremely rapid. Our portfolio is growing very quickly. We've got the teams in place globally to help accelerate that growth and continue that growth trajectory. And it's a sustainable business. And we've got a very stout treasury that was built from proceeds from property sales. And as we need to raise capital, we've always been able to do that. We can vend a group of assets or an individual asset, bring in proceeds to the treasury. We rarely do financings only for strategic reasons. I think we've done one in the last 6 years or something like that. And I don't see the need to do anything in the near future unless there's a compelling opportunity that would require us to do so. I'm a big shareholder in the company. I don't want to see my holdings diluted. I know that the business model works. It's sustainable. We've demonstrated that through time. We're sitting on a big treasury right now that'll help us make a number of additional moves through time.
What is that amount?
50 or 60 Canadian right now. I'd have to check the latest financials. That goes up and down. We had a really good year last year with proceeds because because one of the things we've been doing the last few years that people may not have paid a lot of attention to is a lot of our deals have significant equity components to them. And especially in a favorable market like we've seen in the junior sector, those become quite lucrative positions to hold through time and to continue to grow. And so we've had a lot of value created through our equity holdings in some of our partner companies. We've been able to liquidate some of those, add to the treasury. We do that in a conservative and disciplined fashion. Our goal is to keep the treasury building up through time, and that's what we've been doing.
You have a variety of different partners around the world. I'm just wondering, how do you manage all those relationships?
That's a full-time job, especially in the pandemic with the travel restrictions, whereas I used to just live on airplanes, basically flying back and forth between different projects and talking with different partners. Now I do a lot of that over phone calls, via Zoom, other platforms like you and I are doing today. But there's a consistent and constant, I probably talk to 4 or 5 partners on average per day. I've actually had that many conversations just this morning with a variety of groups that we're working with. Our team has grown substantially through time. We have a lot of people seconded into partner projects. Sometimes the partners operate them quite adeptly. Sometimes we'll be the operator, or we combine efforts like we do in a number of cases. The partnership focus of our business model is core and central to what we do. This is the pistons of the organic engine that helped create this company. And so we take that very seriously. We put a lot of time and effort into it. And I spend a lot of time doing that myself, as does David Johnson, our chief geologist.
You mentioned Dr. Johnson, who I've met. Your company invited me out to your offices in Colorado during the last year before things became prohibitive travel-wise. And what I noticed was basically the room was primarily full of geologists all the way around.
Yeah.
I've never seen anything like that before when I visited a company.
I'll qualify that. One thing that does distinguish our group, and we have some very talented technical people with solid geological backgrounds. And as David Cole likes to say, our decision-making on the commercial side is rooted in fundamental good science and good understanding of the technical aspects of our business. But at the same time, if you want to be a geologist for EMX, you also better be an entrepreneur. All of our guys have a good business sense. And this is something we're very careful about how we built our team through time. I want entrepreneurs. When we go to interview new geologists, one of the best things they can tell me is, hey, I'm already a shareholder in your company. I've been investing in you guys and I'm interested in the markets. I want to hear that because this is a business. This is not a science project. And even though we have a tremendous respect for the side of the business, I feel we're very strong at that. We get a great technical group, but everyone also has to wear an entrepreneurial business hat and understand how the assets and the geology builds value for our shareholders and creates a larger treasury and more value through time. That's really critical.
Having experienced that firsthand in Denver, your entire team is well adept scientifically and with regard to business and being an entrepreneur, and I've not seen that really in such a dense fashion with any other company I've visited with anywhere in the world. It's very, very impressive, but it has to be part of that business model to be loaded up with geologists, because your primary concern is, in addition to reducing your own risk, is reducing the risk for the partners you're going to do business with. You want to hand off great properties.
Yeah, I think we've got a reputation for doing that. At least I hope we do. And I do thank you for the compliment, Ellis. That was a great thing to say about our company. But that's been a focus of ours, to have the people that can see both sides. There are some phenomenal technical opportunities globally that aren't commercial opportunities, and vice versa. So you have to have both, and you have to have people that can see both sides of that. But it does start on the technical side. The geologic opportunity has to be there, but it also has to be a functional commercial opportunity. I've seen some wonderful projects from a technical perspective that'll never be anything commercially. As much as they are attracted to a geologist, they're not attracted to an entrepreneur. So we have to be careful about that.
As long as the commodity is something that can either be moved in the market in a speculative fashion, such as gold, or conversely, as a commodity that's consumed, such as nickel is going to be, or lead, or copper, then you're interested. If the market and the manufacturing space is never going to be interested, that's something you're not going to get involved with. Perhaps not today. Or you may look for that with an eye toward the future and not pay a lot for that acquisition.
Yeah, that comes back to the contrarian approach, where we see things that we think have demand in the future that are out of favor today. One of the things we've done is we've never been a flavor of the month company. So when everyone's piling into vanadium in a nonsensical fashion, unless we've done something ahead of that surge, we're not going to just run with that herd and try to jump on these bandwagons late in the process, because that won't lead to a lot of financial benefit for ourselves and our shareholders. We're careful about that. We love copper. We love our core metals that we look for. We have great expertise in the gold, copper. We're getting better at nickel. We've got some great expertise building in lead, zinc, silver as well. Those core commodities are really what we stick with. We try to avoid chasing the flavors of the month unless we've got some kind of a competitive advantage. Now, one thing we've done through time is we have been able to attract talent months. There's something that surges with, I don't know, some crazy metal like scandium or one of these things. If we find a global expert that can help us and wants to work with our team that can give us a competitive advantage, yeah, we'll certainly look at that. But we try to be disciplined. We don't want to put all our energies into a flavor of the month that's going to be gone in 6 months.
What about vanadium? According to one of your team members, I understand that vanadium is great for storage, energy storage. So what are you doing in that area?
See, we've dabbled in that. You never say never. You don't really know. But, we've seen a couple of recent vanadium peaks that kind of fizzled, valuations that ran up quickly for some of the junior companies that held vanadium assets, et cetera. I do believe that there's value to those types of assets, and we're always on the lookout. And if we see a good commercial opportunity, yeah, we'll pursue that. But it won't distract from the core focus of our team and really what we're good at. And that's these metals that we were talking about: copper, lead, zinc, silver, gold, nickel, those types of things.
I think geologists with a marketing hat and a business hat such as you are more or less intuitive dowsers, sort of like physicians where they know exactly where the pain is and how to treat it before even medically diagnosing it. So in that regard, I want to ask you what your intuition is telling you about gold.
Look at the rate at which fiat currencies are being printed right now. You can't help but think that we're going to see devaluation of things like the US dollar. This is a hedge. The gold's a natural hedge against that. Right now, one of the things that we're seeing globally that people may not appreciate outside of the sector is that not only is the gold price at a relative high right now, $1,850 in the $1,900 range. That's a great gold price for the mining industry. We're also producing at a time when energy costs are relatively low. Now, we've seen oil come back up a little in the past couple of months, but for much of the last year, these companies were mining gold at a time when the price was high and energy costs, their costs of operations were minimal. And so their margins were tremendous, and that's going to continue into this year. So it's a great metal to be investing in. Even if the gold price sags, the energy costs, you still have to look at that side of the business. And typically when you see these commodity surges, oil will be up there, will also be running up with gold. And that didn't happen in this last cycle. So the margins for these companies were phenomenal. So it was a really good bet. Even if it sinks a little bit, these companies will be extraordinarily profitable in the coming year or two. I'm very bullish.
Have you noticed production costs coming down basically because of the conversion away from diesel fuel on the mine site to, let's say, solar or battery technology?
Not so much yet. I think that we're not at the point where we can say that the mining industry's made that conversion. That's certainly what we're going to see in the future. But right now, it has a lot to do with just power costs, and especially the cost of oil being low in the relative sense to the gold price in the past year or so. And that will probably continue.
What's one of your most exciting jurisdictions in the world, since you have property literally almost everywhere on all the major continents? Probably not Antarctica. What are you most excited about personally?
I was talking to David Johnson about this yesterday. And so we've been really bullish in what we've been able to do up in Northern Europe, but also Canada right now. Eastern Canada we see as a highly functional area where you do exploration. You can actually put things into production. You don't have a lot of the social license issues that we're seeing in other jurisdictions. And yeah, a lot of attention is being paid to Quebec and Ontario right now. We're right in the middle of all that. We've got some great positions there. So we're really happy with what we've been able to do in Eastern Canada. And coupling that with Northern Europe, we've been more active now in Australia too. Australia is just a great mining jurisdiction. The commodity prices are quite high relative to the Australian dollar right now. Very functional area where you can put things into production. There's a precedent for it. And social license is much easier to obtain. That's one of the things that when you start looking at development of projects, it's one thing to have a hot commodity, but if you don't have social license, you're going nowhere. And so that's become a paramount concern of our industry globally, is to think about the jurisdictions in which you can actually advance your projects. One of the things, I know that there's been some criticism toward some of the countries in Northern Europe, criticism I don't totally understand. Sweden just issued some new mining licenses just before Christmas for some gold projects that we were watching. And, I can permit a drill program there in 6 to 8 weeks, whereas in other parts of the world, some jurisdictions, it takes a year or two to get a drill permit. So yeah, we found those jurisdictions to be highly functional. We see the same thing in Eastern Canada. Some of the states in the Western U.S., Nevada's a great place to work. Arizona's a great place to work, and we've been there for a while. So I think really emphasizing the ability to obtain social license, the permitting process, and places where you can actually function and advance your projects in a meaningful way.
Having met your geologist and knowing what the landscape is going to look like during the next few years, it would be safe to say, and you have an environmental component to your company, that you're environmentally minded. Let's talk about the environmental aspects of your company. What are you doing as a corporation to brand yourselves that way?
Yeah, that's a great question. We're placing more of an emphasis in the pursuit of green technologies, battery metal assets. That's been a focus. But one of the things that people may not have paid a lot of attention to is last year we made this announcement of an alliance that we formed with a group called Encero. This is a group that specializes. They have some of the world's best expertise in environmental mitigation and remediation of mining sites. And so this is a powerful synergy we have with this group and a great alliance in that we can look at historic districts that have environmental challenges challenges with an eye not only for cleanup, but also to unlock further development potential on the mineral resource side. So that partnership with a very unique type of expertise in the remediation side of the mining industry is going to be very powerful for us on a go-forward basis. We're very excited about that initiative. This is a great group to be working with, and we think we can unlock value in a very positive way for society using that type of an approach.
What a great message to finish on, Eric. Dr. Eric Jensen, thank you so much for joining me today on the program. I look forward to more conversations with you in the future.
Always fun to talk with you, Ellis. So thanks for the opportunity today.
I've been speaking with Dr. Eric Jensen, the General Manager of Exploration for EMX Royalty Corporation, trading as EMX on the New York Stock Exchange and on the TSX Venture Exchange. Go to the company's website for more information, emxroyalty.com. I'm Ellis Martin.
Would you like to be one of the first to see who we are following? Subscribe to our audio newsletter. It's free. EllisMartinReport.com.